Good morning this Tuesday, the 5th of December. I'm Grady Wolf, market analyst with Bell Direct. Wall Street opened the new trading week lower, retreating from the rally experienced on the New York Stock Exchange over the last 5 weeks. The Dow Jones fell 0.11%, the S&P 500 dropped 0.54%, and the Nasdaq took the biggest hit, falling 0.84%. The sectors that have carried Wall Street over the last 11 months took the biggest hit on Monday as investors digest the high valuations of big-name companies, especially in the tech sector. Alaska Air fell 14.2% on Monday after it agreed to acquire rival airline Hawaiian Airlines for $1.9 billion in a bid to expand Alaska Air's presence on the west coast of the US. Spotify shares, on the other hand, rose 8.8% on Monday after the music streaming giant announced it would lay off 17% of its workforce, which equates to around 1,500 jobs, in a bid to cost cut in this high-cost environment. Over in Europe, markets closed mostly lower on the start of the week as the big miners weighed on markets in the region, while gold miners actually bucked the trend with a rally on the back of the price of the precious commodity hitting a record high of $21,000 US dollars per ounce. Analysts are predicting the price of gold will remain resilient into 2024 on outlook of a weaker US dollar, geopolitical uncertainty, and the prospect of interest rate cuts on the horizon. The Stock 600 fell 0.1% on Monday. Germany's DAX rose 0.04%. The French CAC fell 0.2%. And in the UK, the FTSE 100 lost 0.22%. Locally yesterday, the ASX 200 kicked off the new trading week on a very positive note, with the key index ending the session up 0.73%, buoyed by interest rate sensitive sectors, with the tech sector rising 1.9%, while real estate stocks added 1.55%. On the other end of the market, utilities stocks fell 2.52%, while energy stocks lost 1.26% on the sliding price of oil. Chalice Mining recovered 11.47% on Monday, despite no price-sensitive news out of the copper nickel miner yesterday. Star Entertainment Group gained 6.86% on Monday, while lithium miners came under pressure, with Sayona Mining falling 9.68%, Core Lithium shedding 5.56%, and Pilbara Minerals ending the day down 2.22%. Taking a look at commodities this morning, oil continues to decline despite OPEC Plus announcing production cuts of 2.2 million barrels per day in a bid to stabilize the price of oil, which is trading 1.07% lower this morning at $73.28 a barrel. Gold is down 2% this morning at $2,029 an ounce, and iron ore is up 0.4% at $133 a tonne. On the economic calendar today, the highly anticipated RBA rate decision is announced this afternoon, with the expectation of the interest rate to be maintained at the current 4.35%. Stocks trading ex-dividend today include Fisher & Paykel Healthcare Corporation and Dalrymple Bay Infrastructure. If you've been thinking about these stocks that might be worth considering buying in today, as stocks trading ex-dividend generally trade lower on the ex-dividend date. Ahead of the local session here in Australia, the SPI futures are expecting the ASX to open Tuesday's session down 0.53%, taking lead from Wall Street overnight. And now let's dive into some trading ideas for your consideration today. Bell Potter has maintained a speculative buy rating on Deep Yellow and a 12-month price target of $1.81 after the uranium miner added an additional approximately 1.5 years of production to the Tumas project, with the expanded indicated and inferred resources looking into CY24. Now, looking into CY24, some catalysts include a final investment decision on Tumas, refreshed capital and operating costs for Tumas, and Mulga Rock updated definitive feasibility study. And Bell Potter has slightly increased the price target on Genesis Plus Group from $1.40 to $1.50 and maintain a buy rating on the mining services provider following the Genesis Plus and its JV partner Aconia being awarded a $1.5 billion design and construction contract for the Homelink East project by Transgrid. And that's all we have time for this morning. Have a wonderful Tuesday, and as always, happy investing.